What is up, friends, family? Welcome to day 10, no 11 already, of Anomaly sequence. Today we're going to be going over a little bit more of technical terms, kind of giving you a little bit more insight on what you can actually do on a technical basis when it comes to your charts. And we're going to be going over a couple of concepts, giving you like my thought process day by day. Um, Bit by bit as we go through this week, as we're now in week 3 already, pretty much of Anomaly sequence. You guys are slowly understanding how I look at liquidity. You guys are understanding how I talk about fractality on the higher time frames. And today we're going to be breaking it down in pretty much scenarios of arrays when it comes to what you are looking at. So I'm not going to be going over, we're doing logic and we're doing all those good things, psychology, logic later in the week. So that's going to be later this week. Today I'm giving you fresh new information. So have your pen and paper ready. I'm going to be giving you guys more information on market dynamics, understanding you guys a little bit more of the theory behind price action, and pretty much what I look at as well on a day-to-day basis, knowing when I have a high probability day in comparison to when I don't have a high probability day, and the days that are going to help me pretty much advance in my P&L, the days that are going to help me get a good chunk of profit versus the days that I got to be a lot more cautious, a lot more risk on in that case, and a lot more aggressive with my profit taking and all that good stuff. So there are a couple of things that I want to point out. First, we're going to be talking about pretty much the intraday time frames. So what that entails is H1, H4. We have already told you pretty much how I split everything up right in the last technical videos. Monthly, weekly, daily, those are all my feel state, right? That is what I call my feel state. Those time frames are pretty much just your monthly, your weekly, and your daily, right? That's your feel state, your higher time frame. Everything below that becomes your flow state, right? Flow state, I want to kind of reintroduce that to you guys again. That's going to be fractals like H4 and H1, right? That's your flow state. And then we go into flux. Flux is where you are on your execution time frame, and that is pretty much everything that is below H1, right? Not until H1. H1 is a special one. We're going to be doing a whole video on just the H1 time frame later when you've got your arrays and when you've got understanding of what arrays are. But let's introduce that a little bit, right? So overall, what it comes down to is that price moves from 3 different ways, right? There are 3 different market conditions. So we've talked about pretty much the concepts of a sideways market, collection, consolidation, and then price doing an expansion, a displacement. Those are the 2 things that we talked about. If you don't remember that, please go back. That was your first heavy technical video where I talk about expansions and consolidations, and then the 2 different type of expansions that you have, right? Retracements and reversals. Really in-depth video. I really enjoyed making that, so make sure to check that one out if you haven't. All these technical things, again, they're not here. They're not the golden grail. These aren't going to be a way of you to suddenly become profitable. But for many of you, you don't really know where to start. And many of you guys are asking, where do I learn how to trade? This is the best way that you can emulate my thought process. Organize it the same way. Set up your trading view the same way as me, as we did at the start of this sequence. Go through pretty much the same concepts, the thought process, the mental clarity, and then suddenly you're looking at the same charts as me and going through the same process as I am, and then replicating and taking the same trades that I am as well. It's not going to be so difficult. You're not going to suddenly deviate from all of this and end up with a different POI, right? You're going to realize that the things that I look at are always the things that are, let's say, objectively the path of least resistance. And we talk about that a lot with liquidity. So when we talk about price, it can move in three different ways, right? So the first one is very simply put. So we talk about, let's do something like this, right? That price taps into something and then targets these levels, right? So This is the most common way that price moves. So it taps into an array and it targets highs or lows, right? This is your most probable way of trading. You're waiting for price to come into an array, so it bottoms out. In this case, it could be an imbalance, a shift zone, an order block. Either way, you are into a POI. Whether you're trading from supply and demand, whether you're trading support and resistance, not a lot. SMC, ICT, also not really. This is where we're combining everything, right? This is where you see that all these current schools of thoughts are all kind of using their strengths, and I'm combining all these concepts together. So the most probable way of trading is this. This is your A plus setup, right? When you are trading, you create, let's say, highs and lows. In this case, highs, where price is going to be considered expensive above these levels, relatively expensive. So you already automatically have something that price will want to revert back to. Then what we're doing is we are waiting for price to come into a POI, into a point of interest, price of interest, either or. And this will be an array, right? We will go into the details of, what makes, which arrays are better here, whether that's an OB, right? Whether that's a shift zone, right? Whether that's an imbalance, that doesn't necessarily matter. It needs to be something, right? That is one of the market conditions that you will be doing as well. So that's one, right? That's one of the way. A plus is when you are trading from an array, right, into previous highs or lows. Okay, that's the one line sentence. Note that down. That is literally your scaling grade from an array into highs and lows. The next one that we have is when we create, let's say, a lot of resistance and then trade. So here, there's nothing here, but we take out. So it's the opposite, right? So you can obviously understand the school of thought here. And then we're trading into an array, right? And you can obviously imagine, yeah, but these are highs and lows as well. Yeah, but they're not, you get the gist of it. These are insignificant because we have a very clear draw on liquidity in this case. So we trade below lows into an array. Again, so we have different arrays that are going to be nicer. In this case, imbalances, open imbalances are going to be super nice. BPRs are going to be super nice as targets, right? This is also like up in the A levels, A minus to like A normal, just A. So to simplify this one, this is where we run liquidity on highs and lows and trade into an array. It's literally what we had before, but the other way around, right? The other one, A plus setup, is when we trade, let's say, away from an array into highs and lows. And this is pretty much away from highs and lows into an array, okay? That is a very simple way of thinking about it. That's the second way that you are trading. The second way that you are looking at pretty much your price action, right? And the last one, which is the most difficult one, which is what you will see, is trading from highs to lows, right? So into something like this. And then, we have, that's what we call range trading, right? If we have lows here and we have highs here, there's no arrays that you're trying to participate in this level targeting, let's say, the lows. And this is the most difficult market condition, right? I'm writing $ here because this is where the increase of demand of dollar occurs, and this is where the increase of demand for the euro occurs, right? And we're trading from highs into these lows, right? And that's the most difficult market condition to trade into. Why? Because you don't have an array, right? Arrays act as footprints on your chart where you can see that some sort of transactability occurred, some sort of inefficiency occurred, or some sort of shift in pretty much state of liquidity occurred, and that allows you to pretty much partake and calculate your most probable scenario. Whereas trading from highs and lows, and this refers very much to just support and resistance traders, which can be very, very profitable, this is the most difficult condition to do because you've only got one confluence against another one, right? Which is your high and your low. So automatically what you will notice is that Here you are bound to just be fixated on your ETF, so your execution time frame, right? Your ETF, and this is the mistake that many of you guys make, your ETF here needs to be tip top. It needs to be super sparkly clean, like a star in that case, because you can't be doing shitty ETFs if you're not trading away from an array, right? So that's the mistake that many of you make, is you are in, let's say, a scenario like this. You don't have a higher time frame array like H1, H4 or daily, right? You're running liquidity on H1 and you're trying to go for a complete reversal of the week, right? Changing your entire structure of your week off of an M5 entry. Like the rule of command, the order of just hierarchy just doesn't make sense there. You can't be doing that. And that's the biggest common mistake is, you boom, entry pattern, sick, and then you realize you're doing an entry pattern on a Thursday, right? We're already set like high of the week on Tuesday, and your TP is above that high, which would entail an entire flip of that week, right? Remember, price fractality. Is it logical that my TP, what does my TP mean, right? Big gem here. If I reach TP, what significance will that have on my higher time frame candles? Does that mean my H4 flips? Does that mean my H8 flips? Does that mean my daily flips? Sorry about that. So yeah, those are the three conditions, right? The three ways, the three things that you're in a playbook. If you are like the Bulls 96, 97, Chicago Bulls, and you are, the coach, forgot his name, great guy, and you're like, this is what we're doing tonight, or, this is what the opposition is doing, the ops, and you realize, they're playing man-to-man, or they're playing, zone defense, then you need a counter react. Specifically, these are your options, right? You need to understand that, okay, hey, if the market is only giving me highs and lows and it's not creating arrays on the daily, I'm automatically in a scenario that is not favorable, like recent times, until I told you guys that we've literally have more daily time frame arrays that are being created. So now what are we doing? Who would have thought we're actually trading from a daily time frame array into, hey, highs, right? This is the scenario that you like to see, just like what we're doing here, right? We create arrays, we trade into arrays, into old highs. Like here, all of this, we create an array, we trade into the array to old highs, and then we've been targeting this level for so long. All that good stuff, path of least resistance. So that's automatically a filter that you need to have. You need to have this concept. You need to understand how we're doing this, what we're looking at, right? All those things. It's a small lesson for today, but it is such a necessary one because it will allow you to just filter it and realize, hey, these are the three things that we're looking at. And let me break it down one little thing. So this move, so what I talked about, right? This is your pro stage move. This is the one that you shoot with directional bias, right? And what many of you guys do wrong is that you automatically play this move, so the move in between. So it can be with any of those scenarios, right? So in the scenario A, so listen to my words now. I don't have the drawing anymore, but listen to my words now. Scenario A is where we trade from an array, right, towards highs and lows. That is your pro stage. That doesn't automatically mean that you can trade into that array, okay? Just because that daily imbalance is there, that daily order block is there, and you want to target previous daily high, let's say, doesn't mean it needs to be logical, right? That trade, that distance that you want to do into that daily imbalance, so that counter stage short, for example, if we want to go long, needs to be just as viable as a setup as your pro stage, as all the criteria that you tick off for your pro stage long. Likewise, the other way around. When we take out highs and lows and trade into an array, doesn't mean that you can go into, let's say, sorry, my camera just glitched out. Doesn't mean that you can go into trading that high or that low, right? So trading away from that high or that low into the array, that's your pro stage move. Doesn't mean that you can automatically trade into that high or that low, right? Everything there. So this move, it's fractal, right? So understand here in this worst case scenario is if you want to trade, let's say, BSL into SSL, this move here, you require a fractal version of that. You see here, exactly that. So what you're doing here on the large scale is what you're pretty much doing here on the smaller scale of things. You can't just blindly shoot this because you have increased probabilities for this move to happen. Trading towards your POI is the biggest error that many people do. Your POI is the area that it's stacked. That is the area where the odds are in your favor. Trading towards that area is not guaranteed, right? The thing that is somewhat guaranteed based off of your data and your trading plan is that the POI has a good edge. That's the quote unquote guarantee. Trading towards that edge is not the edge, okay? Big difference there. So it's a small lesson. Understand these three like scales. From an array to highs and lows, from highs and lows into an array. And then here you can say like, why are we not trading array to array? Yes, but you can already kind of figure that one out. That is very much internal plays, right? Because you're always playing pretty much from an array to an array at the end of the day, whether it's partials, whether it's risk mitigation, all that good stuff. Don't worry about that one too much. The three ones are these. These are the three main plays for you. So I hope that makes sense. It's a small lesson, but it's a very, very much necessary one because this is going to be the foundation for everything else that we do afterwards.